Hello everyone, welcome to another live streaming from HFM. So I'm Andrea, a market analyst here for many years actually. And today we're gonna basically analyze together and try to interpret, let's say, the PCE number, well anticipated number, especially on a Friday afternoon, especially on a month's end, right? The very last week of March. So Monday, okay, it's not considered to be, it is officially the very last one, but in regards to in the financial markets, it's mainly the focus is on the very last Friday of the month. So that's why we have seen a lot of repositioning today. We have seen a lot of changes, a lot of cash flows out of treasuries and bonds and into risk havens, let's say, in an effort to de-risk, in an effort basically from money managers, hedge funds, institutional players to de-risk their portfolio. So I'm gonna explain everything in a bit, okay? So let me check how many of you joined already. Okay, I can see a lot of people that they have already joined. Welcome everyone. So today it's all about you as usual. Let me know which assets you want me to analyze and I will do it right now. So I'm sharing my screen and we're gonna start obviously with the everyone's favorite basically, right? And gold as usual. So my bad. Let me fix it. That's not my usual setup. And here we are. Perfect. This morning, one of my colleagues was asking, Andrea, do you think that they will retrace from the highs? And I was like, okay, we were like discussing early in the morning. I was like, okay, this is a high Kanashi candle, 15 minutes chart. If you see a lower high at any point, that will be a retracement. And indeed, this is what happened in the European Open. So before we do the technical analysis, okay, I would like firstly to focus on what actually happened. It was all about tariffs. I'm sure that you are all aware of, right? But in a combination with profit-taking conditions on a Friday, as I said, the money managers, everyone, the big players tried to let's say de-risk their portfolio. Why? Because in the new week, on April 2nd more precisely, we have does anyone know? The so-called Liberation Day, Mr. Trump's Liberation Day, and I'm referring to the tariffs, to the date in which the tariffs will take place officially, April 2nd. That's why we have seen the money taken out, cash cash flows out of treasuries and stocks into the gold, and that's why we have seen gold, if I put the 4-hour chart, overall to have a to be well supported and actually managed to break, as you can see, as you have already seen, because it was yesterday's news, the previous record high and posting a new one. The overall outlook, my dear friends, I guess everyone is interested in gold, right? Yeah, a lot of comments for gold. I'm gonna share. Okay, so the overall outlook, my dear friends, for gold hasn't really changed. It remains, from a technical perspective, fundamental perspective, it remains positive, okay? Why is that? So let me also analyze, let me discuss also the technicals, but also the fundamentals, where I base this statement, let's say. Okay, so overall, you can see that is a long rally since 2022. But it's not only that, as you can see, the momentum is still strong weekly candles. Parabolics are below the trend. moving average support the rally as well. If we shift to the daily chart, we can see the same picture with some short-lived corrections, right? Yeah, why is that? First of all, is the lack of clarity in every single front. In the tariffs, right? That's why the money managers, as I said, because they feel, let's say, that there might be further risk due to Mr. Trump. He might announce additional tariffs. So in an effort to step back a bit and make their portfolio a bit more balanced, a bit more neutral, they have shifted to more stable, let's say, assets, more like to say havens, and one of them is gold, obviously. So for the tariffs uncertainty, the very first thing, that just adding and supporting further gold. Second is the Fed, my dear friends, okay? Is the Fed. From the one hand, as you know, we have no significant clarity in regards to the US economy, okay? The majority of the data that we have seen so far, they show a risk of stagflation. So PCE is well anticipated in order to help us find out whether the stagflation risk is still on or not. So a number today that will be weak, that it will confirm, let's say that stagflation risk is still there, could support further gold, okay? So that's the one thing. Also, based on the meeting last, it was last week, wasn't it? Yeah, we don't have neither a clarity on what they're about to do next, right? So that also, the Fed is also in focus. And don't forget that PCE is basically the Fed's most favorable inflation rate. So it will be scrutinized, let's say, for any signs of tariffs impacts, any signs that they might indicate a rush to front run the duties, anything, and whether actually it will whether it will push Fed to take action or not. So just to clarify one more thing before we shift to the technicals. All these tariffs have a direct impact into the US economy. That's why the latest releases that we have seen, they supported they supported that inflation could stay high for longer, and it could not easily meet Fed's let's say target. That's why PCE is crucial today, to give us how tariffs have impact the US economy, and more precisely the US inflation. So it's very, very crucial to keep an eye, especially on the core measurement. Basically, we have another 4 minutes to go until the data are out. But anything that could suggest stagflation risk, it means bad news for the US economy, and that could just add and support further the gold. Okay, so what else about gold? Other than gold, basically we have seen other metals also be supported quite well. Copper is a very interesting thing to keep an eye on, because it's the one that that could remain in demand as markets are weighing, let's say, the risk of the US imports. So yeah, that's the one. What else about gold? Have in mind that we keep having central banks purchasement for gold reserves, having gold reserves, another positive factor for gold. like literally pushing the physical, basically boosting the flow of physical gold, and that's also something positive for gold, and safe haven demand. So let's move on. Let's see the technicals behind this move, and I'm gonna also have next to me the calendar, okay, in order to be prepared. And I'm gonna also go down to the 15 minutes chart. Okay, so 2 minutes to go until the data is out. Let me share the calendar as well. You cannot see it. Why? Just a second. Perfect. Okay, so this is the calendar as well, just to keep an eye on the data together, right? So a minute left, less than a minute left, basically. And so this is 15 minutes chart. I repeat, we have a bit of a pullback, long tails at the bottom, right? This is ready to be to close. Okay, anything that could suggest a significant impact of the tariffs into the inflation, into the inflation, could basically add further, could mean further rally for gold. However, it's Friday, so you should rely on your technicals, because okay, that's already done. It's already closed, and so the immediate support level is basically, it looks like a descending triangle. Let's keep an eye on whether it will break it or not. Okay, we have the short term, a descending triangle, which provides us our immediate support and resistance levels. There is a bit of uncertainty. Where is the calendar? Are they out? Yes, they are out. Spending 0.4%, missed expectations. The core headline above expectations. Oh, that's not good. That's not good. 0.4 core one again, but the monthly above expectations. Personal income higher than expected, double basically of what was expected. Okay, so guys, let's break down a bit the data until we see any reaction in the you see why this is happening, because markets cannot really understand right now. They have not really figured out what these data mean. But to me, at least, how I see it, okay, is that this, you see, the headline or even the monthly one suggests that yes, tariffs have an impact on the inflation, and they keep inflation higher. Okay, with inflation higher in the US economy, the Fed cannot proceed with rate cuts. Okay, so yes, stagflation fear is there. Stagflation risk is there. In my previous live, if I'm not mistaken, I explained further what stagflation means for the economy. Basically, stagflation means it's the condition, let's say, in which we have slow economic growth, but at the same time high inflation and high unemployment rate. So it's not, let's say, so harmful for the economy as such, but it could it has been seen that it could shock, let's say, prices, and it leads to poor economic activity. Okay, and don't remember that this is something that involves the U.S. economy, one of the biggest economies in the world. So yeah, stagflation indicates poor economic conditions. So that means unemployment from one hand, but also um, lack of growth for the economy. So yeah, it doesn't necessarily, we cannot say like stagflation equals with higher gold or lower dollar. There is no strong correlation, but adds to the uncertainty that we are facing in general in the market right now. And this is something that could be uh, uh, interpreted, let's say, as another thing that we need to worry. So that could add eventually to the safe haven demand. As you can see, there is a lot of indecision right now on how this could be interpreted. I'm shifting quickly to the dollar just to see the reaction. Very similar. There is indecision. There was an attempt lower, but the asset is back to the very close to the open price. There is a lot of indecision. Okay, that's interesting. That's very, very interesting. I'm gonna get back to the gold because you're asking about it. But yeah, what we are seeing so far is an unchanged dollar, an unchanged gold. Treasury yields are lower. Let me just quickly jump into the Dow. Okay, there is, yeah, pretty undecisive yet. There is some pressure lower, but not, the volumes are not really not high enough to push, or at least to confirm that indeed we're gonna continue with stocks trending lower. We need to be a bit patient today to confirm the next move, let's say. But as I can see, I'm waiting for the breakdown. Sorry, for the breakdown of my of the of the sorry of the data. So let me get back to gold. Okay, let's wait a bit, but there is some further support. It seems like it. I can see many comments. Hey, all is good. Please look at. Okay, I cannot advise what to do, guys. This is, however, a 15 minutes chart. There is a nice short in this short term. There is a nice descending triangle. So you know that patterns provide the support and resistance levels. So a break and a close above, let's say, the trend line, considering that parabolic SAR remain below the price and we have a strong candle, that could suggest a retest of the all record highs, the 3086 territory. However, we don't have any confirmation yet. The candle has not closed. We're just 6 minutes after the data announcement, so this is not clear yet. I'm referring to 15 minutes chart, okay? 15 minutes chart. The overall picture has not changed, and I would like in a bit, I'm gonna get back to it in a bit, to show you a very useful, a very nice pattern that the colleague of mine shared with me, my dear friend Adi. Was a bearish crab, very interesting one. I'm gonna come a bit back in a bit. In the meantime, I would like to reply to Zipusiso, who seems to be a repo trader. Yes, why not? Why not? Let's I haven't done basically. Oh, wait a minute. What do we have over here? We don't have anything. Okay, let's check repo, and I will get back to gold in a bit. Okay. Okay, my dear friend. Hi, I hope all is good. Please look at repo. It looks scary, That's it. Okay, there is a lot of pressure today. This is a daily chart. We can see that it has a very strong, basically the previous swing low is at 21, 121. Let me check. 121, 122, let's say. Let me, how come? So it used to be so it coincides with another two swing lows. That's interesting. So this area is very, very strong. It was a negative day for Ripple so far today. I'm gonna zoom into the 1 hour chart because before I do that, I would like to see. Okay, that's interesting. That's very interesting actually, because it looks like a formation, which is I'm not sure yet, but let me put some long-term areas of interest, let's call them. Okay. I just solely put lines on my previous swing highs and lows, guys. And this doesn't look, this look a bit like a head and shoulders, but not confirmed yet. It looks like one, but it's too early to tell, right? Gonna also apply my Fibonacci on this latest up leg. And I'm gonna zoom in, my dear friend, to the 1 hour chart to see where we stand so far. So this seems to be, sorry, it has already traded more than 50% of the up leg. Momentum is negative. Moving average, I keep pointing lower, but it hasn't confirmed a break below this very, very strong support level. The one that I drew earlier, the 121.50 level. Let me zoom in further. So there is a bit of a consolidation. This is the 1 hour chart, my dear Zibusiso. 1 hour chart consolidating a bit. Overall, however, is still under pressure. And you know what? I will apply also Heiken Ashes to see the momentum as well. What kind of time frame you're trading, dear? So I want to put it in line. Okay, down, 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 down. Some consolidation. Okay, I see. Okay. Indecision. So, okay. We cannot really tell whether now is a time for further consolidation between 120 and 121.30, dear, because this candle is quite undecisive. But in order to clarify everything actually, you need to use 124.10 and 124.15 levels, okay, as your immediate support and resistance levels. This is a 30-minute chart. And if we see any a break and a closure above 124, we could see some correction, a bit of a rebound, even though the momentum is not supporting a rebound, okay? It does support a continuation of this consolidation, but it's not really supporting a rebound. Nonetheless, we cannot claim that there is a resumption of the downtrend. We need to see the break of 120.15 level in order to indicate that the decline will continue. And if the decline continues, then the next support for repo is the 65% Fibonacci level, 113 level. Is this clear, my dear Zibusiso? It's already dropped, Alex is saying. Let me get back. Woohoo! Which one? Which one dropped? Alex, which one? I lost you. No, I was live. I'm alive already for 25 minutes. Alex, Which one? I'm lost over here. Which one is already drop? You're referring to euro dollar or something? No, euro dollar is still like steady. Dollar, yes, it dropped, but this candle has not closed yet. We have another 2 minutes, and it seems that we're gonna have a quite a dodgy one. I mean, okay, we have 2 minutes until this candle close. This is dollar. Alex, are you referring to dollar? Please let me know. Bitcoin from CPI news, is it a buy, sell, what you were expect? Okay, I'm gonna come to all these questions in a bit. Okay, in a bit. Just let me know. So let me see whether there is a breakdown of the data, just to clarify everything. Okay, yeah. Oop. So the market is definitely confused. I mean, on the spending, on the inflation, tariffs present that they have impacted inflation. Uh, so okay, dollar is drifting lower. Let me check something, guys. Let me check. Let me see what's going on. Whether there's anything I missed, but there is some selling, as I can see, at least in the very, very short time frame. So dollar, okay, dollar's 15 minutes candle just closed at 104 level. At 104, a round number. So I'm wondering whether this will continue. Let me put the Heikinashi setup. So yes, apparently there is some pressure in the short term. This is a 15 minutes chart, guys. Okay, a 15 minutes chart. So the fact that inflation remain higher, okay, clearly impacted. It presents basically it suggests basically that we have a clear impact. So we have seen some pressure on dollar, bizarrely, if you ask me, because that basically suggests more of uncertainty rather than and a shift elsewhere. And it's not actually the data as such are not like negative for dollar. Okay, higher inflation and a delay Fed rate cuts should support dollar, but instead now basically in the uh, in the very first 15 minutes after the data, we have seen dollar lower but not necessarily, and gold higher. So it's all about the uncertainty that the data have caused. Okay, very interesting. So the demand is back on gold. So yeah, so it's a clear. As I said, is basically clear that the markets are basically in a confusion. They are uncertain, and the data just added to the uncertainty and the risk appetite conditions that we are facing and we are seeing the whole 2025, and more precisely and particularly in September, in March. Sorry, March have been significant one. So the hotter than expected release today, that didn't really help at all. for the market participants to calm down a bit. Oh my god. So imagine what will happen next week, because if I'm not mistaken, we have the NFP, right? So yeah. Nonetheless, let's shift on put it on our technicals. Okay, so now I want your full attention, because other than to analyze the short term performance, we're gonna analyze also the long term one, because there was a very, very interesting pattern spotted by my friend and colleague Adi, as I explained earlier. It's a shame not to present it, and a shame not to keep an eye on it, even if if it doesn't, let's say, if it doesn't actually happen in the end. You need to keep an eye on, and at least to be aware. So I'm gonna jump back to the um, actually to the 4-hour chart. Okay, so, and I'm gonna zoom down a bit. Sorry, I need to get back to the to the candlesticks and not high Kenash candles. Are you all with me, guys? Because now you need to uh, pay attention. Okay, zoom in a bit. Okay, here we are. So this is it. One leg, down leg, right? Up leg. That was a higher high than this one. Another down leg, right? And oops. And so gonna zoom out a bit. If we measure the first leg, okay, this one, then we're gonna see that, okay, and let me measure also. So 161, it's up to 3092 level. If I measure also the third leg, basically the third, which is a down leg as well, okay, that's okay. Let me just fix everything. Fibonacci levels. I just want to add the 3.3821, 3382 at, okay. So look at this, guys. Look at that. Okay. For a bearish crab, basically a crab is a bearish formation, okay? But with the condition, let's say, that the distance between the very first point over here and the end of the formation should be no more than 161%. So if this is indeed a bearish crab formation, it suggests that gold could breach 95, 93 territory, or even the round 3100s territory, before we see a strong pullback. Okay, these are just assumptions for the time being. These are just formations that you should keep an eye on. Okay, I'm going to simplify it a bit, okay? But if you Google or if you check our webinars, etc., that I explain the harmonic patterns, one such harmonic pattern is the crab one, and this looks to be a bearish crab formation if and only if the gold managed to extend up to 3100s or at least 3090, 593, let's say, to be more precise, area. So it's expected to breach this area before a sharp reversal lower with the with let's say with a retest and a reversal back to 3050s or even 3000s territory. These are just assumptions. These are just tools that I want you to I'm giving you basically a tool ahead of the new month, okay? Any pullback, any basically a retest of this area could indicate a reversal. So keep an eye on it. Okay, that's the long term. Bearish crab. It's a bearish crab formation, indicates that we might see a retest of 3100s territory before a pullback. Now, that's in the 1 hour chart. Think something to keep an eye on ahead of the US Open or even on Sunday once the Asia market opens again. Now, intraday though, nothing has changed. We have seen a nice rebound, okay? We have basically a pullback as a correction as some profit taking conditions ahead of the data and ahead of the end of the week, but it was just a correction before another attempt to the upside. The rebound, it looks that it has already started, and for the short term, this is a 15-minute chart, even in a 30-minute chart, even in a 1 hour chart, we can see that gold is well supported. So parabolics are all bullish, moving average are pointing higher. So we could see another retest of 30, 85, 86 level, basically on yesterday's highs. There is another 5 minutes to go until this candle close, just for further confirmation. But I mean, even the momentum is supporting this move. Yeah, you see, still on. Let's put my stochastic, which is a short-term one. Bullish crossover here. Perfect. A bit flat. Okay. But still above 50. No indication of a reversal. So, well, this is it for gold. Guys, a bit late. Okay, depends. I mean, if someone was like had put a pending order or something at 3079 before obviously the data, that his order should have already opened. So depends. Depends how which time frame each of you trades. I mean, for a day trader, it's not late. For a 5 minutes trader, a scalper, it might be late. Yes, you're right. So, but it depends from the strategy that each one of you is following, time frame that you're trading. I mean, it's not black and white. Okay. Uptrend. Well done then if you're uptrend. I'm gonna get back to some questions that I have about euro dollar, if I'm not mistaken. Where was it? I saw euro dollar. I saw someone asking about euro dollar. I could swear. BTC. Let me just go BTC. Euro dollar. What are we expecting on euro dollar? Okay. Oof, that's a big 15 minutes chart. Let me just check a bit. That means it's on the dollar. Basically, it's on the dollar weakness. Yeah. So that's again a 15 minutes chart once again, okay? It seems that we have a very, very decisive, strong, bullish candle in euro dollar. Okay, let me just do some proper analysis as well over here. So currently, let me use all of my indicators there as I usually do. Would like my fractals, have my stochastics, perfect. I don't have my moving averages. Why is that? I would like my 5 and 9 exponential moving averages. And then 9, please. Okay, so, oh, no, yellow is not a proper color for a white background. Okay, I'm gonna use the brunette one. So what we are seeing over here is like a reversal. The ceiling is somewhere at 1079.90, and actually no, 108. It's a more appropriate resistance level, multiple fractals, round number. So, okay. So it seems that parabolics are ready to change direction. Stochastic is rising and seems that there is further room to the upside. Let me check. This is a 15 minutes chart. Yes, bullish cross. So, okay, we have a minute to go until this candle close, but there might be some there is some room to the upside. We could see the asset retesting the 108 level, or at least the 107.93. I'm not so convinced. This used to be like it looks that it will retest this trend line before another attempt to the downside again. Okay, momentum is quite strong, but MACD under is still negative, so but nonetheless, follow your charts. Very strong bullish candle. So 107.93, the very next resistance level, and the very next one is the round 108 level. Let's see. That's the 5 minutes chart. Boom, 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 boom. Okay. Yeah, Heikenashi in this case in euro dollar works much better with the euro dollar. Heikenashi works much better in euro dollar with a 5 minutes chart. So you might be right. Who said this? Someone said about it might already run out of steam. Someone I noticed a comment earlier. So yeah, okay. So is it that is a bearish cross? Let's keep an eye on. I'm gonna get back to it in a bit. Let's get back to the gold. Already retrace. Okay, so it seems that we might continue in a consolidation mode, dears. There is no clarity yet. It already reverted back to the descending triangle. So it's all this uncertainty that I told you about. It didn't manage basically to close above the triangle. A lot of confusion apparently. That doesn't change, as I said, the overall outlook, okay? Does not change. It's just adding to further consolidation, possibly ahead of the US Open. Yeah. So let me check again the news. See whether there's anything that is just adding to this uncertainty. Okay. So. Okay. I'd like to check a bit copper as well. I think I have it somewhere. No? Copper. Okay, I do have Bitcoin. Someone mentioned Bitcoin. Let's do Bitcoin. Zibusiso again. My dear friend. Okay, it's a bit steady this week. Steady within the 87,000 territory. So far today, it has been under pressure, similar with Ripple, but we can see that for now we have some consolidation. So the best thing to do is evaluate this ranging market and use the bottom and the top of this range as your immediate resistance and support levels. A break below it, it could open the doors further to the downside and even possibly back to this channel that we have seen the whole year, okay? But we need to see a confirmed breakout of the range market in which we have seen the asset trading into since the European Open. So basically the low is the 84,800 territory, 84,800 territory. That's the bottom of the range. So only a break below this level could open the doors further to the downside, back to the down channel, back to 81,000 or even lower. Okay, but yeah, it's under pressure, but for now it's neutral. So in order to suggest that they will drift lower, we need basically a breakout. So guys, I'm getting back to euro dollar. Okay, I don't know how many of you are scalpers, so I'm doing some scalping right now. I'm doing a bit of a scalping. Look at this beauty. This is a 5 minute chart. Okay, up, strong high ashes, no tail at the bottom, but we have the very first one that it was below the previous two, a very small one in compared to the previous. So this is a sign that we could see a reversal. Okay, this is a 5 minute chart, I repeat. So the smaller bearish candle, the fact that it's lower than the previous two, in combination with the bearish cross that we have seen in our our stochastic, suggests that we might see a reversal. Okay, reversal back to 107.77 or even lower. But for now, this rally has paused. Okay, 5 minutes chart. I'm gonna put also my, like, slightly, can you see that? The last two, so a line below the previous bottom, just slightly below the previous bottom. My moving average have flattened, something that also strengthens the possibility of a pullback. This is a 5 minute chart, as I mentioned. What else? XRP, gold, S&P 500. I didn't mention anything about S&P 500. So very quickly, what we have over here is another swing low. Look at this. This is a 30 minutes chart, Prince, for S&P 500. It looks like a rounding bottom, right? A rounding top, sorry. Rounding top. Rounding top is a bearish formation. And look at that. Bearish formation. Rounding bottom. So that basically, it's a very big candle as well. So RSI remains below 50 since basically since Wednesday, sorry. There is another bearish cross in stochastics over here. Very interesting. So there is further room to the downside, at least in the very, very short time frame. Yeah, there is further room to the downside. Let me check. Also use my high Kanashi formation just to double check. Yes, indeed. Same signal, same indications. Bearish, bearish, no tail at the top. Parabolics are turned bearish. MACD is negative. Stochastic is pointing further to the downside. So, yeah, we might see further room to the downside for S&P 500. Next, actually, okay, let me do the whole thing. Let's see where we're standing so far. Sorry. My bad. So, okay. And let me use also my fractals. The reason why I'm using my fractals is just to help me, spot support and resistance levels. Okay, so we had a swing over here, this latest swing. That will help us in the lower time frame. So you see, 61.8, 100%, which has already broken. And the very next one is basically the bottom over here. Okay, very interesting. So, dune, ready to break and extend further below the Fibonacci expansion. So the very next strong support level is the 58.98, or if you prefer, the 58.600s. So yeah, let's wait and see for a rounding top, which is a bearish pattern, my dear friend. Yeah, okay. It's a strong bearish candle. So further room to the downside. And for scalpers, the very immediate support levels for you guys, for anyone that is trading in a whatever 5, 1, even 15 minutes chart, please follow the Fibonacci extensions, right? 5660, 5657, and so on and so forth. Okay. So, okay. On gold for next month, as I said earlier, okay, as I said earlier, overall the outlook doesn't really change. Okay, it's not changing for gold. Obviously, we are affected from the current affairs, from the news, but overall, from a fundamental perspective, gold is well supported and expected to be well supported for next month as well. But you should rely also on your technicals, my dear Patrick. Okay, the overall outlook, as I said, is positive due to tariffs, due to uncertainty, due to the Fed, due to the central bank's purchasement, due to the demand, the demand of uh, 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 to the demand of gold as a safe haven. So all this just add to gold's rally. So yeah, it's positive for next month. But any reversal below 33,000 territory for gold, okay, if it gets back below 3,000, okay, it could indicate a pullback to 29.50, 29, even 27 level. Okay, so from a technical perspective now, you need to keep an eye on the round 3000 level, because at 3000, it's a round number, it's a key psychological level, and if for any reason, maybe something, breaking news, anything that the US administration does or will do, etc., anything that could take cash out of gold elsewhere into stocks, into dollar, into elsewhere, and it could lead to a break below 3000. It could lead to further decline. Why? Because over here we have some pending orders from sellers. It's a round number. A move below it could open and could trigger further selling. Okay, so as long as we don't see that, the asset remains supported. We might see some consolidations, some tiny pullbacks, such as these ones that we have seen last week. But as long as is supported and above 33,000, sorry, or even you can use your moving averages as well. So, sorry, I'm trying to. No, I want the moving averages. Come on. So 20 exponential moving average, I have changed this one and I put as a 21. It's a very good support tool for gold right now. You can see that since the beginning of the year, it supports very, very well gold. Okay, look at that. It's well supported. Over here, it was retested but never managed to extend below it. So keep an eye on your 20 period exponential, 20 day exponential moving average as one of your tools for April. And don't forget what I demonstrated earlier regarding a possible a bearish crap, which means that we could see a retest of 3100s before a pullback. Yeah. So guys, any questions before I call, any further questions before I call it a day? Because we are nearly an hour live. I see that there is no further news as I can see. It's just the fact that the market is struggling to interpret the data, and not only interpret, but also it's Friday, it's the very last day of March, the very last week of March. So there is some cautiousness, there is some steadiness, and we are just we have also some time ahead of the US Open. So we might see moves as soon as the US opens. So ahead of the US, be careful. Keep an eye on the support and resistance levels that we discuss, on the triangle for gold, on oh, nice. Okay, it managed to retest it, but remains below it. Very interesting. That's the euro dollar. Remember that I put two lines on, a descending one connecting the lows and a flat one on the 108, which is a round number. It managed to retest it, not break it yet, retest it and quickly return back to it. But yeah, it's a very strong 30 minutes chart, so you need to, and 15 minutes chart, so you need to keep an eye on it. Okay, we might see appreciation of euro dollar, so keep an eye on your candles. Okay, even though it's not convincing enough, it's a big candle, yeah, for sure. There is some further room to the upside, but I'm wondering whether that's limited one or not. Yeah. Okay. Nonetheless, yeah. What else? What else? What else? We said about Bitcoin. We said about Ripple. We said about S&P 500. So if there are no further questions, I'm gonna call it a date. So yeah. That's the S&P 500. tumbling between the 56.70 and 56.90 level, undecisive still. So yeah, that's pretty much it, guys. Yeah, I don't see any further news. Keep an eye, as I said, on copper as well. Um, the the inflation today suggests that inflation could remain higher for longer. So that means no further action from Fed, so no cut from Fed anytime soon. That shows stagflation risk is still on, and that shows that tariffs have indeed an inflationary pressure impact on the US economy. So, yeah, so ahead of the April the 2nd, we could see further cautiousness and further risk appetite sentiment from the market participants. Yeah. So yeah, that's pretty much it. What's your take on pound yen? Pound yen. That's pound yen, isn't it? Okay, okay, I see. Basically, I don't remember whether I demonstrated or not, but that was a very interesting formation over here, if I'm not mistaken. Let me double check. Yeah, yes, 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 yes. Um, yes, indeed. So basically, pound yen, it seems that it still is still in a strong rally. Not only because it break this level, this resistance level that we put on like weeks ago, then 192, no, I think it was 193, 192.60, I don't quite remember. But as you can see, the rally remains strong. Higher highs. MACD is keep rising. There is no indicator, it's not flat, it's just keep still rising. Parabolic star remain below the price, so still it seems that there is further room to the upside for pound yen, and I think it's in an up channel as well. So yeah, positive bias. This is what we are seeing, and then we can see that it's still on. There is no, it doesn't like, it doesn't, there is nothing that will suggest that it's running out of steam yet. So yeah, my dear friend, Stephen, yeah, it's still on. There is a bit of a, there are some corrections, but the rally remains overall uh, basically still on. So in regards to the medium term, and after the break of January's peak, we, the next resistance level is basically the 196.75 level for cable. Now, intraday for now, we can see that there was a bit of a pullback, right? Let me just, yeah, much better one. Yeah, okay. There was a bit of a pullback, but the asset remains close to the midline of the channel, consolidating for more than 6 hours in a row. So it seems that the 194.70 level is a strong support level. It used to be a nice resistance level back on Monday and Tuesday. So it's still holding as a nice support level. So it seems that the asset could rebound at that territory, at that level. Yeah, parabolics are changed. So even though stochastic is pointing higher, so there is some buying pressure, but everything will get clear, Stephen, on the US Open. So keep an eye on 194.70. And on the upside, a move, a closure basically above 195.18 could open the doors to back to 195.90 or even higher at the top of the channel. Okay, so I would like also to connect these two just to give me another let me just, where's my okay, that gives you two range, two support, basically a support zone and a resistance zone. Okay, if you want, basically depends on your time frame, but yeah, for the time being, yes, we're seeing that momentum is rising, the asset is supported. This looks to be right now is in a consolidation mode, and we could see a rebound at this eventually away from this consolidation. So that's pretty much it, guys. I'm gonna call it a date. Thank you very much for attending. We're gonna see you again next week. Take care, because we might see some volumes, the volume spiking into the US Open. Rely on your support and resistance levels. Rely on a breakout of your support and resistance levels. Thank you very much. Have a great day ahead. Take care, and see you again next week. Thank you. Bye bye.